Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 16, 2019. As always, please hit the like button and subscribe to this channel. Hopefully microphone issues have been resolved, so you can hear me better now. If you still can't hear me, just let me know. We have a normal kind of looking presentation, but more heavy with bonds today. We'll look at some of the other that I don't normally cover, like LQD and AGG. But overall, stocks end the week on a strong note. Utilities hit a new high. This is not necessarily a defensive posture yet. We'll look at the advanced decline line to see if there are any clues about the tapping pattern for stocks. We'll also look at how to short stocks should the market turn around, and just how to reverse your thinking. Of course, we'll look at the divergences between junk bonds and S&P 500. We'll look at the yield curve and more details about the bonds and the pretty huge run that they had. Look at the Forex, euro and pound near the lows, yen is moving higher. We'll also look at gold, and that's despite strength in dollar, gold is moving higher. And finally, we'll look at Ethereum and Litecoin and see if they are signaling an end of a bull run for cryptos. All right, so let's look at S&P 500 first. We're looking now at S&P 500 futures. The week ended actually quite well. I think it's a very bullish looking candle today on Friday. Uh, Overall, ideally, I would have liked to see a touch of the blue line. That's obviously not happening right this instant. So perhaps we'll see another pullback towards the blue line. Perhaps not. As of right now, I'm just looking at it from a point of view of bullish market. So right this instant, I'm not seeing anything out of the ordinary on this chart. This is just a garden variety correction that we're seeing from the highs in the end of July till recently. Same goes for S&P 500 ETF SPY, nothing out of the ordinary. Record highs were set recently, so overall this is a bullish chart. Same goes for QQQ. Same goes with Dow Jones. Dow Jones a little bit pulled back a little bit deeper, so perhaps we'll see a similar setup that we had here in May of this year. Perhaps that's what we're going to see here, and bottoming pattern and then a move higher. So I wanted to show advanced decline line and to see if we can, I don't know, see if there is any clues between advanced decline line and S&P 500. So we're looking here in the upper part here. You can see this symbol, $ NYUD, and you can see it's New York Stock Exchange Advanced Less Decline Volume. Now, you can also do advanced decline and NYAD, which would be advanced decline issues. So in other words, how many stocks are moving higher, subtracted from that number, how many stocks are moving lower. Then we can construct a on daily, if you would just make it so it looks just like a candlesticks, it would look like a mess. It would look like that. So we have advances, of course, and declines, and sometimes the advances outpace the declines, and you can see a black candle, and sometimes that sometimes the declines outpace the advances, and you can see a red candle. But it actually makes zero sense, and this chart is completely useless. So what we need to do is we need to change it from candlesticks to cumulative. You can see where I'm hovering right now, and this is from StockCharts.com. So once you do that, instead of having each individual day either a plus or a minus, they are added continuously to one another. So a result, for example, if today was a positive day, would be added to the previous day's number, advanced decline line. advanced decline issues or advanced decline volume. So in this case, we can look at advanced decline volume going back to 2018, October 2018, so about 12 months of data. In the bottom part here, we have S&P 500. And you can basically see that there is no divergence. You can see the advanced decline line was moving higher, and so was S&P 500. Sometimes there is a divergence. In other words, for example, advanced decline line was moving lower while the S&P is moving higher. That would indicate that the advance is not very broad. In other words, only a few stocks are participating in the advance higher. Right this instant, this is not what's happening, so I don't see, much to worry about as far as the divergence goes. So here's, for example, same goes for advanced decline issues, how many stocks are moving. And before I was showing you how much volume was moving up or down. And again, I don't see any divergence. We're seeing new highs on the advanced decline line. Now normal looking pullback and no divergence right now. So overall, this is looking pretty bullish to me. So advanced decline line is not showing us any clues about, um, if this is a top. I don't see it just yet. So let's look at utilities, XLU. XLU actually hit a fresh high as well. Overall, utilities are considered more of a defensive stock, I guess, defensive stocks. But in this case, they're still stocks. And as I keep showing, and I keep saying, let's say there is a bear market, and let's say there is a turnaround in the market posture, and we'll see lower lows and lower highs. Utilities will also be participating in a bear market. In other words, you cannot hide in utilities during a bear market. So if the market truly turns around and we're going to see a bear market, then we will adjust our posture basically. But for now, actually, new highs in utilities are not bearish. I don't think this is a bad sign. Let's look at, let's pretend that in the future, sometime in the future, we're going to see a turnaround. Stock market will turn around to the downside, and we are now in the position to sell short. In other words, to bet on the continuation lower. So I wanted to show you a couple of examples of how to reverse your thinking. Now, these are not the actual alerts, but I wanted to show you how I'm thinking about uh, trading, and you can trade anything you want on the upside and the downside. In general, I don't like to sell or short equity. In other words, I don't like to sell or short stocks. And you can see that this particular example, XME, Metals and Mining ETF, is basically various stocks. So initially, what we need to know is to see, was there a breakdown? And yes, there was a breakdown on 24th of October 2018 on this chart. You can see where I'm hovering. And this breakdown, there was a close below the yellow line. So again, these indicators, you can find out more about them at MasterCharts Trading. These are trend following indicators that are also used for breakout trades. So initial breakdown occurred here on 24th of October, and for stocks I used the yellow line. And then you can see that at that point, my thinking changes. I'm thinking, okay, now we're not going to be looking to be buying this stock, but we're going to be looking to sell it, to short it. And where do we want to sell it? At what level? Ideally, I think, is to sell it, to short it at the red line. So you can see that there was a drop into the late December 2018 and then a big rally. So again, now you can see where the downward arrows are. And this is all I'm looking for. I'm looking for a kind of like a touch of the red line and then a close below it, or a high above it and then a close below red line. So you can see there was opportunity right there on the 7th of February, another opportunity on the 6th of March, another couple of opportunities in April, and then in April it just continued lower with a very nice gain. If you are doing, for example, buying puts or selling calls, if you're sophisticated, or if you have a just a margin account, you can outright short it. Then you can see a kind of like a bottom here in late 30, in late May, and a bounce higher. Again, same thing. I'm not making this up. These indicators are mathematically calculated, so you can see where the uh, resistance came in, basically right there, and this is where I would have shorted it if I was, trading on the downside on 31st of July. Why? Because we made a high above the red line right there on the 30th of July, and then on the 31st we closed below it. So this is all I need to know. At that point we can sell short. And again, in general, I don't really like to do this type of trades during the bull market in stocks. And I know there is a bull market in stocks because S&P 500 has closed above the blue line way back in February of this year. And this is all I need to know, really. If it was the opposite, let's say S&P 500 closed below the yellow line, then we're going to be thinking that we're in a bear market. We're not thinking that right now. Since we're not thinking that right now, excuse me, then we should be thinking about not doing this kind of thing, but I'm showing this for information purposes right now. Because sometime in the future, a bear market might start, and you need to kind of reverse your thinking then. Here's another similar setup and another bearish chart, and this is Germany. I shows Germany. So initial breakdown occurred a while back. I'm going to mark it with an arrow right there, and it occurred on the 19th of June 2018. So this is what I need to know to think that this particular stock ETF is now in a bear market. Again, I'm doing this for informational purposes, but if I was trading it for real during a bear market, this is what I would do. I would wait for this breakdown and then wait for a bounce towards the red line. So let's see if this strategy would have worked. Let's see if, I know that I'm missing this big move because there was not a bounce towards the red line. So some people would say, well, you're missing a big move. But if you're an aggressive trader, you can short right there, the yellow line. It just depends on your personality. I like to see deeper pullbacks, and I would have shorted it right there on the 19th of March. Then again on the 9th of April. On 13th of May, 28th of May was a good opportunity. Finally, there was a breakdown right there, another opportunity to short just very recently on 31st of July, and you can see a nice move lower for all of those trades. So this is just to get you ready for when the bear market starts. I don't know when it will start, but it will start eventually. So eventually you'll need to, reverse your thinking and start thinking, how do we want to sell? How do we want to make money on the downside? Let's move on to bonds. First, let's look at junk bonds. So junk bonds, you can see there's a top right there on the 20th of June. While if we look at SPY S&P 500 on the 20th of June, there is no top. The top came 26th of July. So there is a little bit of a divergence. S&P 500 pushed higher, while junk bonds um, made a high and now are moving lower. So this is a little bit of a divergence. You can think about it as a bearish divergence if you think that junk bonds are correct. I don't know which one is correct. In general, junk bonds and S&P 500 move together in lockstep, so it would make sense for them to be moving together. Right this instant, they're not. So perhaps junk bonds know something that S&P doesn't, or perhaps S&P knows something that junk bond doesn't. We'll see. Overall, you know, new highs for junk bonds is bullish for stocks because they, once again, they move in lockstep together. an enormous move on investment grade corporate bonds. We were trading it on the upside, obviously. This is a, we're being on the correct side of the market, basically. And very nice move. Alert was sent here in late January, 31st of January. An enormous move for LQD, which is investment grade corporates, slightly better graded, slightly higher grade than junk bonds. But, overall they're not treasuries, but big move. My God, look at the size of this thing. Uh, Definitely overextended. Will the pullback commence right this instant? It's very much possible, um, but nobody really knows. Overall, obviously a bullish chart, so a pullback, we need a deep pullback for me to become interested. So I want to see a pullback towards the blue line. Overall bond market also an enormous move. We were trading it at MasterCharts Trading on the 24th of January. There's the breakout. You can see where I'm hovering, and it just took off. Overall bond market. Municipal bonds also don't move as much. I mean, it's a tremendous move for municipal bonds, and we were trading it again. There's an alert on the 3rd of January right there. That's a breakout alert. You can see that before the municipal bonds were trading below the yellow, red, and then finally broke out above the blue line and just took off. So a very large overextended move. Let's see if we're going to get a pullback. Maybe this is the end of the run finally. So short-term bonds, BSV, also alert was sent in late December. Uh, Intermediate bonds, IEF, enormous move as well from the late December alert. And the TLT, the 20 plus year treasury, the most volatile. Also late December broke out. I actually still have a position that I opened in January. Sold a bunch, it's 3/4 of the position, but it just keeps going. So, I mean, it's a very profitable trade. So this is a ginormous move for bonds. They are definitely overextended, but they're also not pulling back. So we'll just need to play it by the ear and see if we're going to get a pullback, if finally uh, the yield curve will not invert, because we're literally just a percentage, not even a percentage point away. But I wanted to show you the yield curve again. And they call this normal. See where I'm hovering right there, it says normal, but it's just not very normal looking. You can see that 30-year yield is basically at 3 months yield. Um, this is not great because it looks like it's gonna get inverted. In other words, the 30-year will actually be lower than the 3 months. And this has occurred in the past, for example, here in 2006, 2007. It has occurred in the past and it continued for a little while before the market finally rolled over. The same similar pattern occurred back in 2000. You can see inverted curve, and eventually we had a breakdown of the S&P 500. Right this instant, it's not yet there, but it's getting very close. All right, let's switch gears a little bit. Let's move on to the Forex universe. Here is dollar index DXY. Still moving higher. This is still a bullish chart. There was no breakdown. I keep showing you this watch for breakdown, watch for breakdown. It's just not happening. So we'll need to just, see the chart in front of us and trade it. Euro versus US dollar, big drop still from the 25th of June. See where the um, price touched the red line. You can see what I was trying to describe to you guys. We need to see a bounce back towards the good level to short, and then that would be where would we be shorting at the red line for a bounce back. British pound also at new lows, very close to new lows. I don't see a turnaround just yet. The only major currency that I'm aware of, which is a actually bullish versus the dollar, is the Japanese yen. And here's the Japanese yen futures with a breakout right there on the 31st of May. Another couple of opportunities to buy the futures and a big run higher. So overall, Japanese yen futures are in an uptrend versus the dollar, but the British pound and the euro are still in a downtrend. So overall, effect of this is that dollar index still is in a bullish phase. Despite this, fact that it's in a bullish phase, gold is really just pushing higher without. It's like it just keeps going. So XAU USD, I keep saying XAU over US dollar. So if the dollar is stronger, shouldn't this chart go to the downside? It's not. It just keeps going higher. Recent alert from late May here, resulted in a over 20% move, or almost 20% move. So overall, just incredible trade, and very happy. And some of the subscribers have been sending a really good feedback because they're really making good money. GDX, here's my position. I still have it open. I opened here on 31st of May. Just took tons of profits. Thought this was a buying climax here on the 18th of July. This was not a buying climax. It just keeps going. We'll see again where this goes. I have a kind of feeling that we're getting close to the top for gold, at least the intermediate one. But sometimes they just keep going. This charts just keep going. All right, let's finish off with cryptos. And here's a live chart of Ethereum because Ethereum is, cryptos are traded 24 hours a day. Right now it's Friday. Normal markets are closed. Overall, um, we had a nice opportunity right there in mid-May. I actually sent an alert, and that was good for about 80%, over 80% profit. That's if you took profits, obviously. And this is what I keep saying because note right now, you know, it this Ethereum went 80% higher and now dropped below where the breakout was. So if you were, kind of like an investor, then you should not be doing this thing. You should not be quote unquote trading. What I'm doing here is I'm trading in and out of various securities. And you can see right now Ethereum is breaking down. It's right now below the red line. So I think the support is broken. Perhaps we're going to see a move lower here. Same goes for LTC USD Litecoin. I kind of pointed out this resistance here. Even though we had what I thought was a breakout, I decided not to send any alerts here on the 18th of July or on the 20th of July, just because of the way the candles were shaped. And you can see that we had on the 31st of July, 1st of August, 2nd of August, 5th of August, and 6th of August, right there, we were touching this blue line, touching it from the bottom to several times, and then finally we moved lower. So right this instant, Litecoin is getting very close to the red line, and for me that would mean a breakdown and some security to be avoided, basically. All right, so that's it for this week's recap. If you head over to MasterChartsTrading.com and click on sign up, and if you like what you're hearing, then sign up for the alerts. You get lots of alerts. You can pick and choose which ones you like, stocks, bonds, individual stocks, ETFs, various Forex instruments. gold, dividend stocks, etc. So there's lots of interesting opportunities. Not very expensive at all. At $24.95 per month, I think it's a steal. Trading indicators, if you just want to get your own indicators, I'm talking about these lines, the green, blue, red, and yellow line. You can have them on your chart on TradingView, and you do not need a TradingView account, do not need a paid TradingView account to enjoy the indicators on your charts. And finally, if you want to get both the alerts and the indicators, I think it's a great deal, and right now also is on sale. So do consider signing up. Again, if you have any questions, please send them in. Thanks for watching and have another great trading week. Bye bye.